Okay, so now I pretend good morning, everyone. Okay. Yesterday I was going through almost all your homework. Sorry, I may have missed out some of the other homework, but from what I saw yesterday, it was awesome. I must say that the level of homework that you all did was really, really awesome. Some of yours I want to nitpick, but I really, really cannot find anything much to pick on. So this means this goes to show that you guys are already quite good at using the fried snake checklist. But there are some things that I want to highlight. Okay, some very, very common things, habits that I see. And I don't blame you. I don't blame you. Surely, when you're using this for the very first few times, right, you will always encounter these kind of problems. So let me just go through a few. Some of you have asked me these.
Joe, can we do the admin stuff first?
I'll do the admin stuff. Hold on. Let me go to the slides.
Okay, it's already here. It's already here. Okay. Okay, guys. Right now we actually have 59 people. Okay, Joe, you just go through the housekeeping stuff first. Yeah.
Okay, so again, please remember to rename yourself according to your registration ID. So most of you, no problem. Okay, do turn on your video for safety purpose, for accountability purposes, because we really don't want people who are not from OMM to actually come into this group. Okay, most of you should be in your respective tier OMM groups. If you are still not, look for it. Look for the silver OMM, gold or millionaire OMM. Okay, and our ops team will actually approve your request to join, and then you will be in already. All right. Wow, money. You dollar money. Wow, very good, very good. Okay.
Okay, let me just address some stuff first.
Mm.
Okay, guys. Hey, good morning. Good morning. Okay, I know that it is like really, really very early in the morning. I can see that some of you, okay, you're half trying to set up your laptop and then half trying to eat your breakfast and half trying, okay, to get your coffee done. Okay, that's the reason why we get you to turn on your video, because we also want you to be in the correct state of mind, okay, when you actually attend this course, because what we're going to share with you is actually going to be very, very powerful that can really potentially, okay, bring your investing skills really to the next level. Okay, so I just want us to maybe just take, okay, 1 minute, okay, to just make sure that you can be fully present. Okay, so if you really need to go and get a cup of water, please go and get it. Okay, if you really need to get a coffee, go and get it. Okay, if you are setting up your laptop, okay, this 1 minute is really for you to just get the laptop there. If you need your notebook, your pen, please go and get it there. Okay, make sure that you're at a state where you can be fully present. All right. Okay, so just give 1 minute for everyone to just settle down. Okay, tune in and really get ready to receive so much more for today. All right. Okay. So as you are getting, okay, your state of mind and all of that ready, okay, I will just go through what we're going to go through for this today. Okay. So yesterday, what happened was that we actually went through some very powerful things with you. Okay, we actually went through with you, okay, how you can think about your portfolio. But again, the best way to do this is to really go and book a consultation call, go and book a coaching call with your mentors, because everybody's portfolio we showed you yesterday can be very different. Okay. And we also showed you, okay, yesterday, how concentration can build wealth. Okay, so while many people actually try to diversify their risk through portfolio diversification, but sometimes doing that can go out of control. Like for example, yesterday we had someone share very genuinely about how her portfolio actually had 50 stocks. Okay, but actually these 50 stocks, when she came to think about it, not everyone, okay, she actually had conviction. In fact, yesterday I received a booking for a coaching call, and this mentee also very uprightly admitted to me that initially, okay, when she also had many positions in her portfolio, but it's not because she was convicted about the positions, but rather because she felt that, okay, maybe if I have a lot of positions, one of them will hit gold. Okay, so and then after that, I'm really thankful that yesterday all of you really tuned in and really received all that we had to give yesterday, because I can sense a change of mind happening in terms of our mindsets, because some of you are already thinking about, okay, how can you concentrate your portfolio so that it builds wealth. So like what Warren Buffett says, okay, diversification preserves wealth, it's true, but concentration is the one that builds wealth. And when you really concentrate on one power stock at a time, okay, it is definitely possible, okay, for you to achieve the same results as us, 100% returns, and also getting a double-digit annual income from that power stock year after year after year. All right, so that was what we went through yesterday. And so yesterday, the key frame that we really wanted to get everyone in, okay, was to really make sure that you have mastery of the power stock method. And today, Joe is going to start the entire day by giving you some feedback, okay, on how you are using the fried snake and how you are thinking about your power stock, okay. And yesterday, we also shared that in terms of personal portfolio, okay, it really requires coaching call and monthly review, and we really encourage you to be very resourceful. If you don't have sufficient coaching calls to do one call every month, be resourceful. Okay, there are other resources out there that will allow you to actually reach out to your mentors every month to make sure that you get the monthly review done on your portfolio. And the mindset really is about being focused, okay, about knowing why you are here, okay, and being resourceful. And let's agree, okay, that our focus here, okay, our focus here is not to be an options encyclopedia. You agree? our purpose here is not to be like, the encyclopedia for all the accounting terms. You agree? Okay, so our focus here, hey guys, what is it, man? Our focus here, okay, is to be a millionaire investor. Okay, can y'all type that into the chat? Am I? Okay, I want all of us to really start off with this very powerful frame that what is our focus here? Our focus and purpose here is to be a millionaire investor. We want to get mastery of methods. We want to get mastery of money management. We want to get mastery of mindset. So it's not about having a lot of knowledge, but it's about mastering, okay, everything so that you can be a millionaire investor. And look, okay, Warren Buffett didn't know all the options. In fact, he doesn't even do strategy X, he doesn't do strategy X plus, right? So Warren Buffett really is just good business, good company. That's his method. And once he mastered that, okay, that's how he got his first million, his multi-million, and then finally his billions, right? Okay, so let me just look at the video to see whether everyone is more or less settled. Okay, I can see some of you gulping down your last coffee and all that. Okay, I think you all look a little bit more settled. Okay, let me just see. Okay, hey, if you're ready, can you type ready? Okay, just want to make sure, okay, that you all don't miss out all the important nuggets that will be happening today, right? Okay, then I'm going to hand over, okay, to our power stock Joe. Okay, let's come, Joe.
Okay. So I'm going to just share some feedback. I'll be quite open because I want everybody to learn and level up together. But before I do that, okay, I also received some feedback that, some of you are still not very clear on how to look for some info. No problem. Let's do a quick recap. And I'm going to do another fried snake analysis on Apple. Why? Because Apple could be a potential power stock for a lot of people here. So let's do it together. Okay, I really need all of you to take out your fried snake checklist. Let's go through Apple together as a whole OMM group today. Let's see whether Apple is worth going into your group of power stocks or not. All right. Let me move this away.
Just close it. You don't need all this. Just close it. It's all here.
I'm going to close this one. Wait,
Come, let me help you.
Oh, yeah.
Let me help you.
Hold on.
Ta-da! Okay, wait. Okay. Ta-da! Okay. Okay. Now Joe is also focused.
Yeah, sorry, my tech skills needs to be improved. So I need to have millionaire mindset. Okay. Okay, so I always start with the ticker. Can anyone tell me what's the current share price of Apple? Apple. 苹果. Okay, that's Chinese for Apple. 116.97. Awesome. Wow, you guys are fast, man. How about the PE ratio? Let's see. Let me open up my Morningstar. APL Morningstar. PE is 35.47. Hey, great. Go back to my fried snake again. 35.47. Okay, some of you may see a growth. Can you see over here? 5. The 5 is missing. I purposely hide it. So if you accidentally unhide it, it is okay because this is just one of the values that are used to calculate this PEG entry price. So just ignore the growth if you see it. You may want to hide it back again. If you don't know how to hide it, no problem. Just leave it there. Just ignore it, okay? That's why I purposely hide it. So current EPS, what's the current EPS for Apple? Let me pull out the information for Apple also. Current EPS 3.3. Okay. One thing that can possibly really throw off your entire research is really, if you are analyzing a foreign company, maybe one from Europe, maybe from China, please remember to convert the currency. EPS, you must convert. Book value, you also must convert. Don't forget about that. All right, all the dollar, all those that are measured in dollars, you must convert to USD. Okay, so EPS is 3.3, very good. Okay, let's skip the valuation part. Okay, let's see whether it's even a worthwhile company to be inside my power stock list. Okay, shall we go through the risk? Okay, I will look at the not income statement. I'll look at the financial report. So how do I look for it? Okay, I will just type Apple, okay, annual report if I cannot find, or Apple 10K report. See, Apple 10K 2019, I click on it. Okay, you can either click on investor relations or SEC filings, no problem. Both should bring you to the same place. Okay, once you come here, let it load. I want the latest one, 2019 annual filings. Okay, you should see a 10K PDF version. All right, can hide the other participants' image. Okay, let me try.
It's actually your own view.
Okay, it's your own view. It's your own view. So you just click on the line. Okay, then you can hide it already. So I'm now at the form 10K of Apple. Can you see that? For Visa, it's the same thing. They just changed the logo only. So you know what is good about this thing is that they present their information in a fixed format. And why I like it is because once it's in a fixed format, it is very easy for me to actually search for information because everything is more or less arranged in the same way. First things, because I'm looking at risk first, I'll look at risk factors. Okay, what do you look for first? R&D, science and tech risk. So what I'm trying to do is that I'm trying to find whether does Apple need to keep doing a lot of research to stay on top of competition. Okay, so for Apple, what is my keyword? My keyword to search for is research or development. Let's see. Control F. Let me move certain things away. I cannot see my own. Okay, can really. Okay, I search for research. So where is it? Research and development. Okay, look at this. This is what Apple says. Because the industry in which the company competes are characterized by rapid technological advances. That means Apple is in this industry that is actually moving very, very fast. The technology level is actually moving very fast. The company's ability to compete successfully depends heavily on its ability to ensure a continual and timely flow of competitive products. So once I read this statement, right, straight away I know, hey, Apple needs to be always at the top of its game in order to be competitive. So when I go to my Fried Snake checklist, remember, what should I key in? What should I key in for this science and tech risk? What should I key in, everyone? -1, very good. -1. A lot of you put 1. So once you see a 1, then your values is a bit off. Okay, so don't forget this. Some of you still forget, but it's okay. It's okay. We all get used to it. How about net margin? Can all of you tell me what's the net margin of the competitors? To do it, where do I see? How do I find out who are the common competitors of Apple? Where do I look? Morningstar, very good. Hey, not financial, okay? Not financial, okay? Leo, not financial, So Morningstar, this page, click on, there's this competitors tab, all right? Click on it, and you'll be able to see according to click again. Sometimes Morningstar doesn't behave very well. Okay, you'll be able to see what are the competitors of Apple according to Morningstar. Let's say if you know some other competitors that Apple have, but they are not listed here, can you go and do your own research? Can or cannot? Okay, from your own research, from your own readings, you feel that there's another company that's not listed here. Yes, you can. Always be nimble. So this is one trademark of a very, very successful millionaire investor. They are nimble, okay? They are not bound by the boxes. They know when to stay within boundaries, when to go out of the box. Okay, so this is very, very important. And as you go along, the more work you do, the higher the ability to be a millionaire, to have a millionaire mindset, to be nimble. All right. So there's Alphabet, which is your Google. There's HP. Okay, that's Microsoft. Okay, let's take Alphabet and Microsoft as the main competitors. Can anyone tell me, okay, what's the net margin of Google, Alphabet, and Microsoft? Let me write down. Take a pen. Net margin of Google and Microsoft. For Apple, I know it is 21.33 over here. 21.33. This is for Apple. How about Google? How about MSFT, which is your okay? Microsoft is 30.96. Edwin, steady. Okay, how about Google? Google. Okay, Google is 18.99. Very good. Thank you, Bernie. Okay, so is Apple the champion within this few group of companies? Is Apple the champion? Does it have the highest margin or earning power within these few groups? Yes or no? Apple is 21.33. No. So if it's a no, what must you put here? If it's not the champion, you must put -1. Okay, if it's the champion, then you put 0. Champion means don't have risk, then you put 0. No risk, 0. Okay, if there's the risk, put -1. Okay, so authority. To check, we go back to our financial report again. This time the keyword, we look for regulations. Regulation. See, straight away it's out already. Okay, the company is subject to changing laws, regulations worldwide. What else? Any more? Let's just take another look. Okay, blah, blah, blah. They need to comply. Let me try. Subject to a variety of US and international laws on data protection. So, okay, blah, blah, blah. So, do they have authority risk? Yes or no? Do they have authority risk for this one? So maybe it's net margin higher the better. Net margin higher the better. Okay. Yes. Okay, good. So yes, Apple has an authority risk. So -1. Key person. Let's see. Do they have any key person risk? Key person. What do I look out for? Okay, I look out for CEO. Don't have. You see, in the entire report, they don't even bother to read. How about skill? Here. Okay, straight away. Tim Cook. It's not Tim Curry. Edwin, I think you watch NBA, you confused already. Okay. Are you cooking curry? Invite me to your house, please. All right. So you see, once I key in, I Control F skill. Straight away, I see this. The company's success depends largely on the continued service and availability of key personnel. So including its CEO, Chief Exec Officer, all right, executive team, and other highly skilled employees. So yes, I would say Apple is also experiencing this key person risk. All right, so very clearly, Apple, for this case, they are exposed to all risk. Can you see that I didn't really do any guesswork here? Because I don't really like to do too much guesswork when it comes to this, because I may be wrong. And when I go to the financial report, I am very safe. I'm very confident, and I'm very convicted that, hey, look, based on a 5 to 10 minute research, I know that Apple is exposed to all these types of risk. All right, everybody can follow so far? If you can follow, put okay. If you can follow, put okay. Great, great, great. Awesome, awesome.
Can I just add something from a female's perspective?
Oh, why?
Okay. So I think for females, okay, I'm just saying generally, okay. I think for females we tend to be a bit more. Hey, don't go away, where are you going?
I want to I need to walk around. My leg is quite stiff.
Okay, so right, I think for females we tend to be a little bit more intuitive and a little bit more sensing. Okay, if you agree with me, you just type yes. Okay, so I think sometimes, right, we have a certain like gut feeling, okay, that I think this business is actually very good, or like we have a certain sensing, okay, that this business is very good. Okay, but I think what's very important for females, okay, and especially, okay, you may be a male, but you may be the sensing kind also. It's very important.
I'm also sensing. I can sense whenever I'm hungry.
Okay, sure. Hey, but I just fed you breakfast. No, eat your breakfast. Okay, so right, I just want to say that you should never let your subjectivity and your emotions come into this scoring. Okay, so it shouldn't be a case where, I want to invest in Apple, therefore you go and like try to go and find reasons, right, to go and confirm that, actually Apple has no risk, to go and bring up the fried snake score. Never do that, okay? But you must allow the facts to tell you the full story. You must really, really put your sensing and intuition one side, okay? So can you all just remember this? Facts over opinion. Really, very important. Facts over opinion. Okay, so like even if somebody were to say, this stock is really, really good, okay, and maybe if somebody else, okay, say, this particular stock, okay, fried snake score is 10, okay? Remember, right, you must always look out for what are the facts that backs up this person's opinion. Even for yourself, even if let's say you're very convicted about a certain stock, okay, let's say it can be Tesla, for example, but we know that Tesla actually, the risks are indeed there. Okay, you may be convicted about Tesla, you may even be already invested in Tesla, but you have to do this exercise in a very factual way. If not, right, okay, who are you lying to? You at the end of it, you're lying to yourself. Okay, so really do all this exercise based on facts and figures. Okay, so that's what I want to just share. Yeah.
Actually, I must say, guys also very good at sensing. Husbands, I'm sure you know you can sense whenever you're in deep shit from your wife, but you just don't know why. Those who agree with me, you can type agree. All right, you can sense that you're in shit, you're in trouble already, but you just don't know why. And then the wife will ask you to think. That's where the bigger shit happens. Okay? Okay, back to the lesson. Back to the lesson. See, I laugh until my tears come out already. Ay, so funny. Okay.
Hey, by the way, you keep laughing at your own jokes and nobody is laughing.
Okay. I see some people laughing already. -1 for husband life. All right. Okay, back to this. Focus, millionaire. Okay, hey, you're millionaires, cannot be like that. All right. Okay, intangible assets. We need to, sometimes, okay, companies that are very, very well known worldwide, especially, you know that some things you sort of know, but let's just go through the report again. Intangible assets, I'm looking for very strong branding, copyright, trademarks, patents, and licenses. So let's just go do a very quick check. Okay, brand. We know that the Apple brand is legendary already. All right. Okay, there is Apple brand, nothing much. Okay, how about, let me look at patents. Okay, here, straight away. Okay, the company currently holds a broad collection of intellectual property rights relating to blah, blah, blah. These include patent, copyright, trademarks. So we know that this company, Apple, actually has quite a strong group of protection for all its intellectual property, such as the design, the way they do their things. So can we comfortably say that, okay, for Apple, they have this mode called intangible assets? Yes? No? And what's the score here? +1. Very good. So if there is this mode or strength, it's +1. Very good. All right, low cost advantage. Some of you, okay, those of you who have some problems looking at low cost advantage must listen now. Very, very important. What is low cost advantage? It means this company is able to get its raw materials for a lower price compared to the competitors. That means somehow they are able to negotiate with the vendors, the suppliers. Hey, don't sell me so expensive lah, sell me a bit cheaper, I buy more from you. Okay, I order more. So this is called low cost advantage. And how do you check whether the company has a good low cost advantage? All right, Sometimes it may not be raw materials. Sometimes, okay, sad to say, some companies, they may want to exploit their workers a little bit, especially those on the lower end of things. They pay them very, very low salaries. This is also, in a way, lower production cost. Okay, so now we are not trying to be we are not trying to argue from a moral point of view. We are just trying to see whether this company Apple is worth investing in or not. Okay, so how do you check for low cost advantage? You compare the operating margin. Let me repeat again. You compare the operating margin with the competitors. Why operating margin? Because this is the part where they compare the revenue versus the cost of production, including salaries. Okay, so can anybody tell me? Okay, let me look at Apple's operating margin. Can anybody find for me the operating margin of Google and Microsoft? Oh, Bernie, steady. Bernie is, okay, Google is 19.76, Microsoft is 37. Okay, Apple, how much for Apple? Operating margin, 24.5. Okay, so does Apple have the highest operating margin here? Yes or no? No. So if it's a no, what figure must you key in? 0. Very good. Okay, Apple is not the one with the lowest cost. So I'll put a 0. I'll put a 0. Okay, the other thing, high switching cost. This one, the report will not tell you. So you must understand the business. Preferably, okay, you must know you should be using the product, okay, for the best of your ability. And if you don't know, you can Google, what are some reviews of this product or this company, okay, to see if the customers usually continue with that company or not. So Apple, do you all think it has a switching cost, high switching cost, 1 or 0? Does Apple have a high switching cost? Yeah, I would think 1. Okay, we know for a fact that there are really, really people who are really, really loyal to this Apple brand. Once Apple launches, even before they launch a new product, they will queue up for days in front of the Apple store. And if Apple is not making money, or they just built one of the newest stores in MBS. Hey, who went to this MBS store? How is it? I haven't go. Okay, so network effect. Network effect. What does network effect mean? Network effect means that, okay, the more people use this product or service, the more other people will want to naturally be attracted. For example, dating apps, your social media, your gaming. Once you have a lot of friends playing this particular game, you are very likely to be pulled in as well, because your friends will actually ask you to play along. Okay, 0 for network effect. Or some say 1, some say 0. Oh, why network effect 1? Catherine? Maybe you have a reason. You may be correct, Catherine. Okay. So most of the people say 0, so I'll just put 0. Hey, Catherine, do you have is it a typo, or you really have a very strong reason? Oh, airdrop function. Oh, okay. So to you, it's a switching cost, because you use that. Okay, you can put that as a 1 for you, because okay, you find that this is a function that other competitors do not have as of now. Okay, you can put it for yourself. Okay, high switching cost. Sure. So the last one is efficient scale. It means that this particular industry, they cannot contain so many companies inside. So it doesn't make sense for too many companies to be inside this particular industry. So for Apple, do they have this efficient scale? No, 0. Hey, Leo, you think Apple industry, that means can anybody sell handphone? Okay, can. So for efficient scale, I'll put a 0. All right. So we can see for economic mode, Apple hits 2 of it. 2 of it for now. Let's go to our very, very familiar fright. Very, very familiar fright. Okay, free cash flow. How many points for free cash flow? Free cash flow over here. 0, 1, or 2? 2, 2, Hey, awesome, awesome. You guys are getting it so fast. Free cash flow 2. Okay, ROE. How about ROE? ROE is further down. ROE, 69. How many of you will give 2 points? You will give 2 points. I will investigate, because remember what I say, once ROE is super high, I want to investigate. Let's look at the financial health first. Debt to equity is 1.3. Okay. Must do research. For now, I will put a 0. Why? Because to me, the debt is a little bit high, a little bit on the high side. And I don't want Apple to post a very nice ROE number just because the debt is high. And remember yesterday I shared with you, this is one of the very, very common ways, right? Some companies like to manipulate their ROE number. They take on a lot of debt, make the equity very low. Equity means net asset value. All right. Once this happens, your return on equity, which is your ROE, will become very, very high. For this case, I have not done my proper research. Okay, I will put it in somewhere. ROE, I'll put a 0 first. Okay, I will type here, need more research. All right, over here straight away, DE ratio, I know is a 0 already. Okay, I will do more research. Why? Because I noticed that recently Apple has taken on quite a lot of debt. It could be because they are just trying to take advantage of the low interest rate. That's possible also. So that's why I need more research as of now to be safe. All right, just to be safe. Or it could be share buyback. Okay, just to be safe, I will put 0 for now. Interest coverage. Interest coverage. Where is interest coverage? Okay, look here. 23.41. So it means that Apple has the ability to pay back 23 times, almost 24 times its interest expenses. So no problem over there. So Apple is still quite safe in terms of debt expenses. So interest coverage, I will give 2 points. EPS. Okay, how about EPS? EPS 0, 1, or 2? For EPS, 2. Okay, most of you are saying 2. Very, very good. 2 points for EPS. Dividends. Does Apple give dividends? Yes. Okay. So this is the overall increasing revenue. All right, let's go. 1 for dividend. Thank you, Gordon. Increasing revenue. Revenue, will you all give 0, 1, or 2? 0, 1, or 2. I also see that the revenue seems to be a bit slowing. Okay, Vera will give 1. Fine. Okay, most of you will give 2. Okay, so I'll stick to 2. I'll go with the majority. So now you can see, this can be very nimble exercise, even though it is quite a fixed checklist. So you see, once you are more familiar with the company, you can start to modify the rules a little bit. Later on, I will share with you one of the mentees, how she play cheat, how she modify the rules. But the way she does it is so super. Okay, I saw it. I saw her homework. I just laugh. Yeah, I never thought of that. I really never thought of that.
So Joe, you not only laugh at yourself, you laugh at other people. It's so bad.
Yeah, I also laugh at you. So revenue, I'll put 2. For now, I'll put 2. Okay. Share repurchase, we know that they do share repurchase. A lot of you already say share repurchase, I put 1. Okay, why? How come I can put 1 for Apple? How come share repurchase I can put 1 for Apple? Later, I want to go through one more company. That is a negative example. Okay, this one, I hope you will pick your brains a little bit. Share repurchase, will you all put 1 or 0 for Apple? Share repurchase. 1, okay, because they are still cash rich. They have a lot of cash. And for them to buy back their own shares, not a problem. So retained earnings, Okay, those who have problems finding the retained earnings, please look at my screen now. Please don't look at your fried snake checklist. How to check for retained earnings? How to find it? Look for financials. I repeat again, to check for retained earnings, look for financials. Go to balance sheet. Okay, click on it. Okay, I'll go all the way down. Okay, retained earnings is here. I'll just slide. Retained earnings. Okay. Oh, this is the opposite direction. This is the most previous. Then this is the most recent. So will you give 0 or 1 or 2 points for retained earnings? Wesley gives 0. 0. Yes, thank you, Bernie. Hey, don't forget, this is 2015, 2016, 17, 18, 19. So actually it's increasing. You must go up and see. Must go up and see. Okay? Don't assume. Must go up and see. See? Oh shit, I see wrongly. Oh. I assume. My fault. Wow. Yeah, so lesson learned. Cannot assume. Okay, must check. So retained earnings 0. I would say 0. It seems to be going less and less. I don't know what they are doing. Maybe they spend all their money to build the NBS shop. So retained earnings 0. It's decreasing. So how many of you will put Apple as your power stock? Overall, 5. How many of you will still select Apple as the power stock now? How many of you will avoid? No longer. Maybe say no longer. Okay. Catherine says avoid already. Okay. So we see, we don't know what's happening to Apple. Not at this price. Okay. So since you say this, very good. Let us check the valuation. 5-year average PE. What is the 5-year average PE for Apple? Click on valuation. Part-time stock can. Wow, Wolfie, you very rich, Still can. Wow, Apple is a part-time stock. Woohoo! Steady. I like your attitude. 5-year average 17.75. So I'll put here 17.75. Straight away I know, wow, it's almost one time almost 100% overvalue. So this is not a good price for me. How about book value? What's the book value for Apple? Again, I will just type in everything mechanically, then I will check. Book value 4.23. Book value 4.23. Okay, dividend. How much dividends are Apple paying? 0.78. Okay, 0.78. All right. PEG. What's the PEG ratio for Apple? What's the PEG ratio for Apple? PEG over here, 2.89. All right. So I'll key in 2.89. Okay. So based on these FA valuation, I know that I should be waiting for at least a 90% reduction. Cannot be 90%. 50% reduction. They should reduce by almost half. All right. Apple's price should come down by at least half, okay? Almost half of it for me to go in. But let's calculate. If this is the, so my entry, according to the 5-year PE, entry, not entry price 3. Okay, just entry is equals to this one times my EPS. Equal. I will need to wait for it to come down to almost $60, $58, $60. Okay, so very clearly, Apple is not a I suppose that for now, all of you, Apple is not your power stock now. Okay, any other questions from this? Unless earnings goes up twice. Very good, Charles. Wow, you're getting it. Unless the EPS suddenly jump by almost 2 times, then the value of Apple changes. All right. Hey, very good, Charles. Very fast, very nimble. All right. So, any questions for this Apple analysis? No, I suppose no, because nobody typing anything. Okay. So unless the share price goes down by almost half, or investigate ROE. Okay. Investigate ROE. Sure. Let's see. I'll go to the report. Straight away, how do I check the debt? I want to look at balance sheet. Okay. Oh, this one doesn't say anything. Okay, I'll click on this. So I want to see, okay, but the balance sheet, retained earnings, I think they are just decreasing. Okay. So let's look at the liabilities. What's the debt? Looks funny. Looks funny. Okay, this year compared to last year, September 28. Oh, sorry. Oh, I know why. This is 2019. I know why. Okay. Rebecca, hold on. I know why. Because this one, I'm looking at the annual report. So this does not give me updated figures. So this figure, okay, over here is as of September 28, 2019. To check the latest ones, I will need to go to the latest quarterly report. Okay. Quarterly. The latest one. So it should be the July one. Okay. So again, balance sheet. See, this is accurate as of June 27. All right. It's a 10Q report, Yoksun. Okay. It's a June 27. Rebecca, remind me to come back to your question again. This is of June 27. Usually it updates once every 3 months. So it's October now. September is over. They should be trying to come up with this report now. I think if you wait a few weeks more, you should be able to see the most updated balance sheet for Apple. And in fact, for a lot of other companies. Let's see. Total liabilities, 245. Sure not. Then in that case, maybe there's something wrong with the Morningstar figure. Okay. In that case, maybe something wrong there is something wrong. Okay. Charles, thank you. 29 October, they are coming out with the third quarter earnings report. So in terms of assets, 317. Okay. Liabilities, 245. So now I know, look, Morningstar is not accurate already. Somehow for that figure, Morningstar is not that accurate. They have slightly more assets compared to their liabilities. So even the DE ratio should not be 1. It should be less than 1 at least. Okay. So just to a very quick calculation of the DE ratio, I'll just take 245, take the debt divided by the assets. 0.62. Let me calculate the shareholders' equity. Wait, is that to equity? Okay, what is equity? Equity is all the assets minus all the debt. So let me see if I got anything wrong. All the assets minus all the debt. 0.62. Oh, so equity is very, very low. Yeah, maybe correct. Sorry. Equity is only 72,000. Equity 72,000. Okay, debt to equity. We take the debt, all the debt, divided by equity. Yes, it's correct. Correct. So 245,062 minus, sorry, divide, yeah, 72,282. Yeah, in fact, it's even higher. It's 3.39. It is 3.39. All right. 3.39 debt to equity ratio. Okay. So you see, sometimes Morningstar may not be the most updated because equity dropped a lot. That's why the ROE increased so much. So these are the things that you may want to go back to the financial report. Why? Because they should be the most updated information. Morningstar is a free website. It gives you a very, very good benchmark, but it may not be the most accurate because I don't expect them to update instantly for every single company in the world. It is a super, super hard task. That's why going back to your financial report is so, so important. Okay. I think Rebecca wants me to repeat how I get the entry price. Okay. So Rebecca, I just compared this is the current PE ratio. This is the 5-year average. All right. So this entry price is just, okay, remember PE ratio is current share price divided by the EPS. Okay. So this is the share price I want. So in order to get this share price, I will take if I think that this is the fair EPS, 17.75, I take this fair EPS, sorry, fair PE ratio. Fair PE ratio. This is the fair PE ratio multiplied by the EPS. And I get $58 and almost $58.60. Okay, Rebecca? So how I got this is the formula here. Take the 5-year average PE ratio multiplied by the current EPS. All right? Okay. Some of you from your homework yesterday also asked this thing. Let's look at this company called CBOE, one of my favorites. Can you all go to CBOE Morningstar? Okay. Okay. Oh yeah, wrong. CBOE. CBOE. I make sure I never type wrongly. Oh,
what happened?
I don't know. Aiyo.
Okay,
Let me redo it.
Mindset.
Let's have a millionaire mindset.
Okay.
CBOE morning. I'm using MacBook. Maybe because the MacBook hear me talking bad about Apple, then decide to.
Okay. Millionaire mindset overcome. Yay. Yeah.
Okay, CBOE. A lot of you say that you have trouble finding the PEG ratio of CBOE. Let's take a look. PEG. Hey, you're right. It's all dash. How? How? Hey, why Morningstar don't give me PEG? Yeah, Ling. Yeah. So what you can do? Okay. Current PEG for CBOE. Again, Morningstar is a free website. Okay, I don't expect. See. Okay, there's this other website called Zacks. All right. So currently 5.7. PEG is 5.7. All right. For CBOE. You can see other things. Okay. Okay, this Zacks one is so far, I will say it's more updated than Morningstar. So you can look at Zacks. All right. Okay, I don't know whether you can see it's a bit small. PEG ratio is 5.7, almost 6. Okay, so we know that it is overvalued. All right, because they expect the growth. You see, PEG is an assumption. They are trying to assume, okay, the growth. Because growth, if you look at a 1-year growth rate, it's different from a 3-year growth rate. It's different from a 5-year growth rate. Okay, so every time you use PEG, you must know that it is always quite a big assumption because they are trying to use a relatively safe growth rate to compare to the PE ratio. Okay, that's why for CBOE, because over the years it has not grown too fast, it is growing just very slowly. So that's why the PEG ratio is very, very high. So 5.56, you can put it in. All right. Sometimes it is like that. Okay. Sometimes it is like that for Morningstar. We cannot expect Morningstar to give us all the figures instantly and super accurately. So sometimes we must do a double check. First place, I always want to do a double check is through the financial report. If I still cannot find it through the financial report, I will actually look at Google. I will just find a few websites and see what they say. Maybe I will find a few PEG ratio and then I'll average it out. Why? Because whatever PEG ratio they are using right now, okay, they are assuming a growth rate. So I'll just take a few assumptions and then just average out the assumptions. Okay, so this is one way where you can overcome, because you remember, valuation, you don't have to be super accurate. Okay, it is impossible to be super accurate, but you can always try to be safer. Okay, if this makes sense for everyone, can you please type MS so that I know that everybody is okay? Hey, great. Okay, so let me tick the for some of your homework. I also see this sometimes what company is that sometimes for the 5-year average, you will see that the 5-year average PE ratio is super high. Okay, why is that so? Maybe one of the years here, suddenly the PE ratio for some reason is spiked up. So for me, I will be very I will look at all the numbers and make sure they are more or less around that range, okay, before I take the proper 5-year average here. If it suddenly spike up, then I will recalculate my own 5-year average. JD. Let's look at JD. Some resources need to pay money. Yes, no choice. If you really cannot find Wolfie, you can go and Google. Okay, it's just a little bit more inconvenient. Wow, this one. Okay, guys, in this case, what will you take as the safe PE ratio? For JD, what would you take for the safe PE ratio? Looking at this. Yeah, current one. Okay, just take the current one. All right, just take the current one. So you see, if you are doing a very new company that has very limited data, this is the possible danger. All right, PEG currently 0.94. Okay, I can tell you roughly, I know why the P ratio suddenly go down, because maybe they reported very good earnings. The share price maybe didn't drop much or even go up a bit. I'm not too sure. I haven't done a good study on JD, but I can tell you, looking at this, chances are the earnings, the EPS went up. That's why the PE ratio went down, and that's why the PEG also went down a little bit. Okay, so if you want to invest in JD right now, you can, but because you see, based on this data, you also know it may not be that accurate. So if you want, just go in a little bit. Okay, Wolfie, just go in a little bit for JD right now. Or you can set a good PE ratio to go in when it reaches 35, 32. Okay, you don't always have to go in right now. You can always try to be a bit safer. Or you can use the charts, which Sarah will share later, how to find a proper price to enter. So you see, FA valuation is not your only weapon. You still have your TA valuation. So these are very, very different, but together, when you use these two together, they really help to concretize your no resistance. Then don't go in now. Look for the EMAs. Okay. When you use the FA and TA together, it really helps you to build a very, very strong case for your valuation. All right, let me see what I miss out. Currency. Okay, so I saw this thing. I saw this thing. I was super. Let me show you the ETF is different. ETF is different, Karen. We cannot use Fright Snake to analyze the ETF because how to find EPS, how to find ROE, no such thing. Okay, ETF usually we will just use how we see whether the ETF is good or not. We see what companies are inside. Number one, okay. Number two, we also to evaluate we just use TA. Okay, because there's no such thing as price to book for ETF. Dividend you have, okay, but I don't think there's a PEG for ETF. All right, so this Rachel, wow, you know what she did or not? Rachel, are you here? When you open up financial sector can, but banks are different. All right, Eddie, financial sector you can use a Fright Snake, but banks I am really crafting out my new criteria. I will share more. Okay, Eddie, if you want to look at how we analyze banks, right, you can go to the financial sector deep dive. I talked a lot about banks. Okay, so what Rachel did, right? What Rachel did to play cheat for ROE, she put 1.5. What is this company? Facebook. Okay, so it's like to me, it's like wow. Although she play cheat, but that's in a way being nimble. That means she's not very confident about the tool, but she feels that it's a bit rip off if she only gives one. So she used her own. She modify her rules. Okay, 1.5. And I want you all to take note of this. I want you all to take note of this. Last time, all the questions are almost, what to buy, what price is good, which valuation I use. Right now, this is what she says. 10K report seems to indicate many uncertainty on government regulations and the risk of slower growth. So can you see in this one statement, right? She already summarized the entire risk about, or potential risk about Facebook. So I'm quite certain, right? Even if she goes into Facebook, she knows what are the potential risks. Okay, she may want to adjust her portfolio allocation instead of going maybe a full 10%. Okay, she may want to cut it down to 5 or 7.5. Okay, if she is not confident about this. All right. So you see, this is really the level. This is from here. I really see a level up. From really, don't even know how to analyze, don't even know how to evaluate. Straight away in one sentence, summarize the entire potential risk about Facebook. So Rachel, if you are here, very, very awesome. Very, very awesome. All right. The other one is Jonathan. Jonathan, are you here? If you are here, can you unmute yourself?
Hi, can you hear me?
Yes, Jonathan. Yes. Can you share?
Yeah.
I'm super amazed by the level of detail you go in. So can you just share where you find all this information?
Yeah, can. Do I share my screen?
You don't mind you go according to this one. I already shared the screen already.
Oh, okay.
Oh, you want to share screen? Okay.
Actually,
oh, you have rights. Okay, you share screen. You share screen.
Can you see?
I can only see your desktop. I cannot see your.
Oh, yeah.
Okay.
Actually, all the information I got from the 10K report, like you said. So I think just what I did, I just copy and paste. Then after that, I read it as a summary instead of like reading through the whole 10K. So for example, when I first did a regulation, right, like you told me to, so let me scroll down to the list. Yeah, so I saw all these risks. Okay, so for example, we are subject to IP risk and regulatory proceedings. Oh, sorry, this is research, right? Okay, I do the research.
It's okay.
Okay, so I highlighted the title. And then each of them got a subheading in blue, right? So we cannot always enforce RP right our licenses. So I just put it as a dot point here long.
Wow.
So as a whole, I get a summary to see like this is the risk, and then there's about 4 or 5 points under the risk lah. So I think if next time we come back, at least we get a refresher rather than search again. Then for same, okay, go back to research. Okay, no, since you're at legal. So then I happened to scroll through the financials, and I saw under this section called commitment and contingency. And this is actually where companies are regulated to report any potential losses. So here, I think every company has this commitment and contingency note. So commitment just means that what they are committed to incur in the future. These are not on the balance sheet, but they might have already signed certain contracts with other companies, to spend this amount in the future. But more on the contingency, right? It's like mostly legal proceedings that may materially impact the financial statement. So they put it under contingency because they don't know whether they'll win or lose at this point of time. But you will be able to see the details of the legal proceedings that they are going through. So for Intel, you see it's just like two legal cases, but it's quite detailed. But when I went to AMD, right, and I look at the contingency notes, they actually have like 1, 2, 3, 4, 5, and then they have environmental matters and other legal matters. They have so many cases ongoing. So I haven't read into all of these, but I was just looking into Intel, understand. So what I did in my summary here, I just pasted the first sentence, like AMD sued them for unfair business practices. And then the other one below is that the Google search team identified several security vulnerabilities. So again, I just put like a first sentence as a summary. So I copy and paste. So I think this would form up my authority bucket here. Then back to research, right? So I did the same thing. I searched research here. So yeah, by going down research and development. Yeah, so I saw here, they said that research is R&D is a critical factor. So I just paste it here also as a summary. And then the next one shows actually how many percent. I think these both also show 18.6%, 19.1%, and 20. How much they spend as a percentage of net revenue. They also actually show it here. So then over here, right, they actually explain why did the R&D go down by 1%. They actually explained in the previous years also what they spend on R&D, data-centric business. But now you can see they ramped down on the 5G and stuff. So basically, actually, I only use the search bar at the side. I never really go through everything. So I just went down to see if there's anything else. Or maybe that's where I found the contingency under research. I saw some litigation here. I was like, I looked into this. So that's how I got the percentage. I did the same for I did for the 3 as well, and then I explained why. Okay, so the net margin I got from Morningstar. It's quite a quick exercise. If you open all the 3 competitors, then you can just see like net margin here, and then AMD net margin 11.96, and this 25% for NVIDIA. I just put it all 3 here just to see. Then the last one is yield management. So if I yield, they also have quite a few things about dispute management. Here they mentioned due to complexity of operations, they need to have a highly trained skilled force. They also mentioned that our industry. So yeah, whenever I see this big header, I think this is a key point. So they said that we must attract, retain, and motivate employees. So competition for highly skilled employees is intense and it's critical to business. And so I pasted this first one, which I think is relevant. So I just paste what sentence I feel like simplifies the whole thing. Then the last sentence I also pasted, furthermore changes in management team is from here also. Furthermore changes in management team can disrupt our business and the failure to successfully transition could adversely affect our operations. So I only pasted 2 out of the whole thing. So then, yeah. Balance sheet, yeah. So, yeah. Operating margin. And for the MAU, right, I can't really find any network effect. So I just went to search like kind of market share, but I only got the PC market share. So I just went to Google like, oh, it's gone. Yeah, but I got another website here. Yeah, they actually showed the, I think this one was better. They actually showed the start. Maybe if I can refresh.
Yeah, because this one they want you to like pay.
The market share between AMD and Intel. Yeah. So you can see like Intel was quite high and then they start to drop, whereas AMD start to go up. So to me, I feel like, okay, maybe there isn't a network effect in that sense, because people can just switch to AMD because they like it and it has been a trend over the quarters that the users have been going over to AMD. So I think these two, the market is highly competitive. That's how I rate Europe. And then the last one, right, was the share repurchase. Share repurchase is also from the 10K. I think I search the repurchase. Oh, it's quite long. Stock repurchase. So I went down to see repurchase of common stock. I went to
No, I think if you search for the whole thing, share repurchase, you'll be they will have less hits. Have or not?
Oh no. Stock. Yeah, this one, stock repurchase. So they actually have a table here, and then they show every quarter how much they repurchase the share price for. So yeah, I included that on top also here in the stock repurchase.
Wow.
So to show that they have a repurchase here. So the other thing that I was looking through, right, was that in the Intel website. So how do I get this? Here. So all under the SEC filings, right, they usually have the 10K and the 10Q. But if you go for all filing type and filter by 2020, sometimes you may see like something called current report filing, which is things that they feel that is very significant. They need to report to the market. So I was clicking through to see what are these. Then I stumbled upon this saying that, on August 19, 2020, they already agreed to repurchase 20 million share repurchase, 20 billion. So as of now, right, they are currently at $20 billion. Intel announced.
I think it's around 10 billion.
Oh, somewhere. Oh yeah, here.
No. They have already.
Yeah. Okay, sorry.
Yeah, 17.
Following.
Yeah.
Intel has repurchased 17.6 billion as part of the 20 billion share repurchase. So they actually kind of have a plan really. So this share repurchase is almost kind of guaranteed in the future, which I think is a good news from what you shared yesterday,
Yep.
that you help the earnings per share to go up. So yeah, I included in here this news that I thought was good lah. So for me to see also. Yeah. So that's all. That's how I actually look through everything. So that's mainly how I did it. Mainly from the 10K, and then I look through any other announcements here. Mostly are changes in directors, but there was one which is about the share repurchase. And then that's all.
Wow, mind blown.
Okay.
Thank you for sharing, Jonathan. Wow.
Okay, thank you.
Yeah. Hey, this is guys, I don't know whether you see it or not, but this is really the value of being in a committed community. What he did was he actually just did one time very focused work, and every time he needs to update anything, he just needs to come back to his usual original spreadsheet, which is already very, very updated. Anything new he just add in. Okay, it is super awesome. Okay, yeah. Okay, wow, Jonathan, thank you so much for sharing. Very, very awesome. I'm also very, very impressed. Okay, thank you. Thanks, Jonathan. Wow, you see, the community is also thankful to you. Yeah. Okay. Hey, thank you, Jonathan, once again. So, yeah. Wait. So, all right. Okay, so the next person that I want to really share about, right? Hey, Joanne, are you here? Joanne? Joanne?
Hi.
Hey, hello, Joanne. Okay, for Joanne, right, I know those in the gold tier you may know, but the rest of you may not know. I know that a lot of you, okay, you say that, hey, Joanne, can you share your homework on Costco?
Okay.
Can find out, Joanne.
I'm looking at it now.
Okay, you haven't shared that.
Yeah. Share screen.
Yay. Okay, can you go to second slide?
Second slide.
Okay. Guys, I don't know whether you noticed, right? Okay, for Costco, it is like a supermarket. And I saw in Joanne's case, right, she actually put 0 for low cost advantage, but 1 for high switching cost, which is a little bit weird for supermarket, because supermarket, how they really try to outdo the competition is they actually want to get a very good low cost advantage, but their switching cost is almost 0, because who will actually really go for very all the items are the same, okay? So people will tend to just go for the cheaper, the shop that can give them the cheaper price. But for Joanne, she did it the opposite. And when I asked her yesterday, I think she was a bit she fumbled a bit, and then she said, oh, actually she's doing so much research that she is a bit confused. Correct or not, Joanne?
Yeah.
And okay, Joanne, you remember what you tell me about this high switching cost?
I need to read through the annual report before I...
No need. You already say already. Yesterday when I asked you, you already say already.
Huh? I don't remember.
You said something about membership, right?
Yes, about the membership.
Can you explain a bit about membership?
Yeah, because Walmart also have membership under the name of Sam's Club.
For Costco?
I want to compare between these Costco and Walmart.
Okay. Okay, so Walmart also have, Costco also have a membership.
Yes.
So what does this membership do? Do you know?
There's a revenue, part of the revenue for the company,
Okay.
and they offer a product which is lower cost. Yeah.
Okay. Then hey, thank you, Joanne. Thank you. Yeah. So guys, I this is really something that I want to highlight. Why? Actually, because of her research, right? She actually managed to see that actually both Costco and Walmart, they are starting to do this thing called membership. And every year, the customers must pay to renew the membership. I don't think it's very, very expensive. But once people have this membership, right, they are entitled to even more discount. So in a way, this actually creates a high switching cost because why? You paid for the membership already. There is very, very little reason for you to pay for the membership and not go to that particular shop. So through very, very innovative methods, right? Costco and now Walmart is also trying to so Chris is saying, okay, those who are not members, usually you cannot buy a lot of things. All right. And to do this, right, Costco really push down their prices. Sometimes I think one of the most popular items.
Cannot even go in if you're not a member.
Cannot even go in. Wow. Yeah. Okay. You need to show your membership. Oh, this one I don't know. Thank you, Chris, for letting us know. Okay. So I know that they always sell their roast chicken or their oven chicken, and they sell it super cheap, almost at cost price. So this is really, they are trying to do a bit like IKEA where they make you walk around the whole shop, okay, and try to tempt you to buy something. All right. Jonathan is thinking of ways to cheat already. Wow, Jonathan, I like your nimble thinking. But these kind of things cannot. Okay, within the community can, but public Facebook cannot say. All right. Cheat also must know how to wipe the mouth. All right. So okay, guys, I also want to share with you this thing about Joanna. When she came to us for the first time, right? She complained, oh, I don't know how to look through 10K report. But she really tried, and I don't know. Okay, for those not in the Gold membership, maybe you don't know, but English is not her first language. So when she did her healthcare stock research, she really almost go to the dictionary almost word for word. And I can tell you, okay, those in the Gold tier, you know, her research is really leveling up very, very fast. Think about it, for the people, okay? Some of you say, oh, I'm not accounting, I don't know, I'm not an accountant, so I'm not good at financial reports. Joanne, she is not good at English. And yet, really, not good at English, how? There's this thing called dictionary. She really typed in word for word, check the meaning, she wrote it down, and then now, okay? Joanne, can share all your research or not? Maybe on the main page. You okay or not?
Which one?
Your Walmart, your J&J, ZTO.
Walmart?
No, not now. I will share it on the main group. Can share on the main group or not?
Oh, you mean the OMM?
The OMM main group.
Oh, okay.
Can hey, awesome. Okay, so hey guys, thank you, Joanne. Thank you. Okay, thank you very much. Yeah. So guys, I don't know whether you realize this or not. There are really, really people among us, right? That are okay. For me, Joanne is very, very inspiring because even for me, I could never imagine that I will go to the extent of almost using the dictionary word for word to check out the meaning of the words in the financial report. The number of pages is already crazy. Now, the number of words in the report is even more crazy, but she persevered, you know. She kept telling me, she kept texting me, said, hey, Joe, I spent one whole week to do only one research. But then I asked, I don't know whether I asked you this or not, you know, seriously, how many people in the world, how many investors in the world, right, actually even bother to do one company per week? Okay? Really. So really, this is really the live example of an overcoming spirit. And I'm also very inspired, to be honest. Okay, so really don't give up, guys. Even if the report is not the easiest thing to do, nobody says it's easy. But is it possible? Definitely yes. If you need more time, just take more time. Don't need to rush. Okay, Joanne completes it in 1 or 2 weeks. You can take 1 month. You can take 2 months. All right. If you need more time, just do it. But make sure you do it consistently. Warren Buffett reads 500 pages a day. Not everyone can do it, not even me, but can you read 50 pages a month? I'm sure that is not too difficult for most of us. Okay, 50 pages a month is just like 1 or 2 pages per day. And you don't need, with technology now, you don't need to read every single page. Okay, so guys, there is really nothing stopping you from being a successful millionaire investor. Seriously, if you ask me, what is the only thing stopping you? Is yourself. Really. All right. How much you want to be, you can do it. All right. Okay. Hey, thank you, Joanne. Okay.
Thank you.
So yeah, I've covered all the feedback that I want to give you. Okay. So remember to put the -1. Remember to use the keywords. Remember to check. Okay, to check for any spikes in the 5-year average PE, any exceptionally high number in one of the years or exceptionally low number. If there is, you may want to actually readjust the average 5-year PE ratio. All right. What else? Okay, remember to convert the currency, especially if you are talking about a foreign company. Oh, somebody also asked, for foreign company, there's no 10K report. Correct. I forgot to say this. So sorry. For foreign company, you don't look for 10K report. You look for this thing called 20F. 20F. Okay, you may want to write it down somewhere. Foreign company, look for 20F. Hey, Joanne, do you mind you don't share your screen?
No, it's okay. You can override one.
I can override.
Just share, yeah.
Okay. So let me show you. Where do I get this 20F? For example, okay, Alibaba. So I will just type Baba 20F report. Okay, so same thing, SEC filings. Same thing again, annual report, go to 2019. All right, can you see the 20F? 20F over here. So for foreign company, it's called 20F. Same thing, just go to your PDF. Okay, the outlook is slightly different, format is slightly different, but it is still okay. Can you see? Almost all the things are the same. All right. So it's just a different naming. US company, 10K. Foreign company, 20F. That's about it. All right. Okay. So any last questions for me before I hand over the time to Sarah? Any questions? Okay, if there's, can we have a break? Of course. Okay, so shall we have a...
Wait, let me.
Okay, Sarah will talk about the break.
Okay, guys, you know, right? Actually, every single session, right, there are actually many important lessons. Okay, and I really don't want to let you go, okay, off, right, without really consolidating all these lessons, because each of these, right, can be a very powerful millionaire seed. Okay, so I just want all of you to type down, okay, what was the most important lesson that you learned this morning? Okay. So I want you to think big. Okay, it's not just about the content lessons that you have learned, but it's also the mindset lessons, money management method. Okay, so can you just type in what is the most important lesson, okay, that you have learned this morning? Okay, for me, myself, right? Okay, after listening, okay, to Joe's session and all of the sharing from the mentees, my most important lesson, right, is that, okay, it is possible to overcome. Okay, and we saw many hiccups happen this morning. Okay, Joe is not very good with tech, but you saw him overcoming. Okay, Joanne, okay, she I don't think she's from a financial background. Okay, and for Joanne, right, her first language is Cantonese. Okay, but yet she overcome. Okay, like for Jonathan, okay, you can see that we gave him the fried snake checklist. Everybody received the same checklist, but you can see how Jonathan, overcome the limitations of the checklist and even expanded it, okay, to actually include so much more facts inside. And he really used it, okay, to achieve his purpose. So I just want you all to type in, what is the most powerful lesson that you learned this morning? Okay, Vera, okay, be resourceful, very, very good. Okay, all of you are given the same resources. Seriously, all of you are given the same resources, okay? Okay, and you must remember, you are a resourceful millionaire. You can always think out of the box, okay, to make things happen. Okay, so guys, make things happen. You can do it, all right? Okay, very good. Yeah, stop trying, okay? Never stop trying, overcome, very good. Yes, with the right mindset, having perseverance, okay? Dig deeper, okay, commitment, all right, very good, okay? Yeah, overcome your fear. Yeah, stepping forward. Okay, and Stephen, very good. Okay, and actually, yeah, it's also this power of the community. And later on, okay, at the end of the day, I want to share. Okay, actually, right, I feel that the power of the community for the respective tiers is a little bit underutilized. So I really want to actually bring this to fruition. Okay, but I'll talk more about this at the end of the day. Okay, so okay, from Bernie, okay, have a beginner's mindset. Okay, learn from one another. Okay, to level up. Very good. Okay, having the right mindset, you must overcome your own limitations. Okay, never limit yourself to grow. Okay, and yeah, okay, and Angela, if you are here, Angela, okay, so I really hope you all don't mind that sometimes I call some people out on okay, Angela, I want you to see Angela, okay, that it's very important, okay, to recognize that you actually can overcome. Okay, now all of us, right, we have our own difficulties. Sure, it will surely be there. Okay, but you must think of your goal. Okay, what's your goal? Your goal is you want to be a millionaire investor. Okay, and when you actually focus on your goal, right, then everything in your body, right, will be so focused on that, right, that you will overcome. Okay, so I just want you all to know that our role here as your mentor is really, okay, is really just to direct all of your attention, all of your energy, okay, positively, so that you can achieve your goals. And we really believe, okay, that all of you can be millionaire investors. But really, okay, this kind of mindset changes is one step at a time, okay, one community change at a time. And I really am so glad, okay, that all of you, okay, received this very powerful takeaway this morning. Okay, so I just want to leave us, okay, with some nuggets, one final nugget, okay, before I just let you go for a break. Okay, so I just want to talk about this power lesson, okay, from Warren Buffett. Okay, so anyway, right, all the things that we teach you, okay, is not plucked out from the air, okay? Okay, we teach you all the principles and everything, right, from a billionaire investor himself. So of course, if you want to be a millionaire investor, we must learn from a billionaire investor, right? Okay, so okay, remember that when it comes to the fried snake, okay, remember that what you're doing is you are actually trying to be as factual as possible. So like, for example, like how Jonathan has demonstrated, okay, for every single risk, he actually has the respective facts in mind. Okay, for every mode, okay, there is actually a fact, okay, to actually back it up. So never rely on your own sensing, never rely on somebody else's opinion. Okay, so like what Warren Buffett does, okay, he doesn't read other people's opinions. He wants to get the facts and then think about it. Okay, so like what Joe mentioned, right? Okay, actually, right, for all of us as millionaire investors, right, actually all we have to do, right, every month is just to have concentrate on just one power stock for that month. And for the entire month, right, if you focus on just one power stock, okay, everything in your body will look out for opportunities for that power stock. I can tell you that. So when the news come in, you are very focused, you think about, okay, this news, is this something that is detrimental to my power stock, or is this something that is an emotional response from the market? Because if it's an emotional response from the market, then what you will see? You will see opportunity. Okay, but if you see that, hey, there's this particular news, okay, that is actually suggesting something about the business fundamentals of my power stock, then don't be emotional about it. Okay, then you don't be emotional about it, then you have to tell yourself, okay, then maybe my power stock is not really a power stock, is not a good business. Then you move on. Okay, so the key thing is to be very focused, okay, and to really, okay, put yourself in the mode, right, where you go really very deep, okay, one stock at a time. And that is how Warren Buffett does it. Okay, and that is how his success has been replicated across his portfolio managers, and therefore that is how we are going to do it. Okay, okay. So I really hope, okay, that that all of these, okay, lessons, okay, are things that you would actually really keep in your heart. Okay, and each of these are seeds, okay, that will grow you to be a millionaire investor. All right. Okay, so let's go for our power break right now. Okay, power break. Okay, let's go. Okay. Okay, so let's just look at the schedule first. Okay, we are actually. So our break, okay, we are actually starting at 10:30. Okay, let's go for a 15-minute break because I think we really had a rather intense morning. Okay, so go and take a power 15-minute break, okay. go and do whatever you need to do so that you can be fully present, okay, for the later session, okay? So what we're going to cover afterwards, okay, I'm going to actually go through. Okay, remember that content is really quite secondary, because content, honestly, you can always get it, okay, from anywhere in the internet, okay? But what we want to teach you is how you can use all this kind of content, right, okay, and help you to grow to be a millionaire investor. So what we're interested really is to build you up to millionaire investors. We're not interested in building encyclopedias, okay? So go and take a 15-minute break. We will come back at 10:45. Please do whatever you need to do, okay, so that you can be fully present, okay, with us for the next 1.5 hours when you come back from a break. All right, okay, so everybody, okay, go and can you please type in the message power break? Okay, then after that, okay, please go and take a 15-minute break, and we will come back, okay, at 10:45. All right, okay, so see you everybody. Okay, you can go for a break.